Hey everyone, this is Knowledge Topper, and in this particular video, we will cover one of the most important topic as part of risk management, and that is enterprise risk management. Like, what is enterprise risk management? How enterprise manage their risk? What are the risks that different enterprises are exposed to? We'll also understand different risk response strategies that can be used by different enterprises, as well as we will also look at the core elements that includes in enterprise risk management process. Okay, and we will understand all of this with the help of an example. So most importantly, your concept should be clear. Okay, so let's get into our today's video. As written on your screen, enterprise risk management is a term that is used in business to describe risk management methods that firms use to identify and mitigate the risk that can pose problems for the enterprise. Like you know every enterprise risk management practitioner always has this question in their mind, like what are the major risks that could stop our enterprise from achieving our mission, our goal, or our objective. Okay, so in order to answer this question, the very first most important thing is to understand the nature of enterprise business. Okay, the activities, the strategies of enterprise that particular enterprise is working on. Okay, because each and every company's nature of business is different, and that's why we can say that they are exposed to different types of risk. Like talking about the four most important types of risk that is pertain, or you can say related to enterprise are these. Okay, though I have already uploaded many important videos related to the types of risk, where we covered interest rate risk, credit risk, operational risk, reputational risk, currency risk, country risk, and exchange rate risk as well, or and other types of risk as well. So, like, all these types of risk are also linked with our today's topic of enterprise risk management. Okay, I will post a link of playlist in the description of this video, so you can watch the types of risk after watching this video. Okay, easily. So now back to enterprise risk management. Like, these are the main types of risk that is faced by almost each and every enterprise. Okay, like first we have hazard risk. Like, hazard risk include all those risks that present a high level of threat to human life, health, or property. Okay, like the example for this, you can say that there will be a fire for whatever reason, like maybe due to electricity short circuit. Then we have financial risk. It includes many types of risk like all those risks that are directly related to money, you can say. They include financial consequences like an increase in cost or a decline in revenues. Okay, like if we take an example of financial risk, I have made a very good example for you guys to explain you about financial risk. Okay, this is the example. Let's suppose there is an enterprise in Pakistan. Okay, the enterprise in Pakistan, and they manufacture plastic household items. Okay, and they purchase the raw material of plastic items from US based importer. Okay, from USA. Let's make a scenario to understand. We just make a simple scenario. Okay, just for the sake of understanding. Let's say that Pakistani enterprise ordered 100 kg of plastic raw material. Like, though the ordered amount of 100 kg is very low, I know that, but I am just talking. I'm just taking this so it will be easier for you guys to calculate. Okay, and the price for that 1 kg plastic raw material is $1. Okay, so like 100 kg of raw material of plastic, and the rate for each kg is $1 US. Okay, now the most important part. Let's say we ordered like Pakistani enterprise ordered our raw material on 1st of January. Okay, and the rate of $1 US is PKR 150. Okay, and the material arrived to us on 1st of February. Okay, so basically we have to make payment to US based importers on 25th of January. Okay, as you can see, the payment date is 25th of January. So the rate of dollar on 25th of January is 165. Okay, so that means on the date of order, the rate of dollar is 150, as you can see. Okay, the rate of dollar on the order date is 150 rupees. Okay, and the rate of dollar on payment date, like on 25th January, is 165. So as you can see, we have 100 kg of plastic raw material, okay, and you can see the rate when we order is 150. So 100 multiplied by 150 is 15,000. And when we make payments, basically the rate of dollar is 165, okay, and 100 is our kg. So we multiply it 60. So 165 multiplied by 100, we will end up with 16,500. So we will have a loss of 1,500. So in that case, basically, Pakistani enterprise is exposed to exchange rate risk due to fluctuations in exchange rate. Okay, as you can see, when Pakistani enterprise ordered the raw material, the price of dollar is 150, and when they pay to the US based importer, the price of $1 is 165. So in that case, the Pakistani enterprise is exposed to exchange rate risk, okay, due to fluctuations in exchange rate while dealing with international transactions. So there are a lot of techniques, like there are future and forward contracts available to hedge this risk, where enterprise locks the value of currencies in which they are dealing when basically they are ordering that particular any particular goods, okay. So they are dealing to avoid high foreign exchange fluctuation. They do hedging through different hedging methods, okay, in order to avoid high foreign exchange fluctuations. Now back to our types of enterprise risk. Then we have strategic risk. These are risks that affect or are created by strategic business decisions. Like the example for this will be any decision that is not taken through fully assessing or analyzing, okay. Like let's suppose a US enterprise made a decision to expand its operation in China. Now let's suppose after 6 months of its expansion and establishment in China, let's say due to bad government relations between America and China, that US enterprise needs to shut down their business in China, okay. So this is the example of strategic risk, okay, where basically enterprise US based enterprise needs to make a strategic business decision by identifying and assessing all possible risk associated with their decision to open their you can say that to expand its operation in China, okay. Then we have operational risk. These are risks that materially affect an organization due to many reasons, like there is prospect of loss resulting from inadequate or failed procedures of internal affairs of the organization. Then we have systems or policies, okay. Then we have employees errors, system failures, fraud or other criminal activity, etc., and so on. Now let's jump to risk response strategies now. So these are the risk response strategies for enterprise risk management. And management basically selects one of the 5 appropriate risk response strategies mentioned here on your screen to deal with the identified risk, okay. First one, we have risk avoidance. In this strategy, enterprises prefer the elimination of risk or activities that can negatively impact the organization's asset, okay. Like if you take an example for this, let's say enterprise, after seeing the decline in demand forecast of one of their products, decides that they are cancelling the production of that good. So they can cancel the production of goods to completely avoid the risk of future losses, okay. So this is the example of risk avoidance. Then we have risk reduction. Like in this strategy, enterprises prefer the mitigation, or you can say limitation of the severity of losses, okay. Like if you take an example for this, let's say ABC Enterprises that manufactures air conditioners, they found out that the circuit of their air conditioner model while testing have many issues. So the management of ABC Enterprise can plan frequent visits to their manufacturing department, like in order to identify potential problems early in order to mitigate high future losses of their repair and maintenance, okay. Then we have alternative actions. Talking about the alternative actions, the consideration of other possible ways to reduce risk, okay. Like the other alternative action will be related to the associated risk, like whatever risk it will be, okay. Let's suppose an example here. Like suppose ABC Enterprise based in Pakistan that manufactures towel, instead of importing the cotton from China, In low prices due to exchange rate risk, they prefer to purchase cotton locally within Pakistan in order to avoid high exchange rate fluctuation. So this is an example of alternative actions. Okay, then we have share or insured strategy. You can say that it is the actions of transferring risk to the third parties. We all know about insurance companies, insurance agencies, and these are the example for that. Okay, buying an insurance policy that could cover any unexpected losses for the business. Okay, so this is an example of share or insured strategy. Then we have the last one, which is the risk acceptance. As you can easily understand with the name risk acceptance, in this strategy, what enterprises did, they acknowledge and accept the identified risk, their willingness to accept the possible consequences. Okay, like risk acceptance, you can say that it is any loss from a risk not covered or avoided is an example of risk acceptance. If I give you an example, like natural disaster is one of the example. As an enterprise, you can't do anything and you simply accept the risk. Okay. Now let's move to our last slide, which is on core elements of an enterprise risk management process. Okay, or you can say enterprise risk management process as well. So basically, enterprise risk management follows a very, very distinct and ongoing process. Okay, where it actively identifies and assess the various strategic and major risks to ensure financial security for enterprises, for business. Okay, so the process of enterprise risk management include these five specific elements. Okay, the first one is the strategy, or you can say objective setting. Okay, like the first process is to understand the strategies of business and associated risk of that particular business. Okay, then we have risk identification. Okay, in this process, risk managers provide a clear profile of all major risks that can negatively impact the company's overall financials. Then we have the third step, which is the risk assessment. After identification, in our second step of identified risk management, what enterprise did, they basically they strictly analyze these identified risks to determine both the likelihood and potential occurrence of those risks that we already identified in our second step. Then we have risk response. Okay, in this process, in this step, risk managers consider various risk response strategies, and basically they select appropriate actionable paths to align identified risk with management's risk tolerance. As we seen in our example above, where we see one of our risk response strategy of alternative actions. If I can show you, this is the one where we take an example of ABC Enterprise that is based in Pakistan, that manufactures towel. Instead of importing the cotton from China in low prices due to high exchange rate risk, they prefer to purchase cotton in a bit higher prices locally within Pakistan. Okay, in order to avoid high exchange rate fluctuation. So this is the example of risk response. Okay, then we have the last step, okay, or process, you can say that, and that is communication and monitoring. I would say the most important process of enterprise risk management. Okay, it is basically to gather relevant information and data that needs to be constantly monitored and communicated across all departmental levels. Okay, so this is the most important step. You can say it is a cycle. And as an enterprise, you have to keep identifying and assessing all existing and newly possible risk in short time intervals. Okay, so this is all about enterprise risk management. Hope you like our today's video. I have tried to explain each and every step to you guys with the help of an example. Hope you understand about enterprise risk management. Hope all your concept will be clear. In order to understand the types of risk associated with enterprise, okay, you can watch all my videos. I will attach a link in the description of this video. You can just go and click to that link and you can easily watch all those types of videos. So this is all about enterprise risk management. If you like this video, thumbs up. Do subscribe to our channel Knowledge Topper, as well as like our Facebook page, and do join our Facebook group as well, where you find a lot of good material related to these topics as well as from other courses as well. So this is the video for all of you guys. Thank you so much, everyone. It's time to say bye-bye.